Okay, here we go, everybody. It's me, Gregory Mannarino. Monday, 31st, 2023. How about we start off with this? How many of you recall just a few days ago, we spoke about electric vehicles? I had said, and we covered here, how I believed, and most of you agree, that these automotive car manufacturers are overplaying their hand with regard to how many people actually want an all-electric vehicle. Well, guess what? Ford here, this is a headline, is losing billions on their electric vehicle program. As a matter of fact, Goldman Sachs, because of this, just downgraded Ford. Okay, this is going to be a common theme throughout all, in my view, the car manufacturers here. You know, it just doesn't make any sense to me. The technology is not there yet, period. And people aren't ready to say bye-bye to their gasoline-powered vehicles. So this is going to be an interesting set of dynamics unfolding moving forward. So I just thought that was kind of interesting here. You know, we just speak about it, and then we find out that Ford is losing billions. Goldman Sachs just downgraded Ford, and this is going to be something that pervades all, in my view, of the up-and-coming EV manufacturers. Maybe not so much Tesla, okay, the higher-end cars, but the regular guy, the regular girl is not ready for it. Anyway, that's number one. Number two, are you watching crude oil? We are firmly above $81 a barrel. Now, you and I, before anybody else, let's be honest here, we're calling for crude to be 80 or above months ago. Now, all of a sudden, here we are. And in my view, again, this is probably just the beginning. Playing right off of that, speaking about Goldman Sachs, so Goldman is now upgrading the energy sector. Okay, I wonder why that is happening. Do you think that, well, maybe it's because Goldman understands that the cost of energy is going to move much higher here? So what do you want to do? As I've been explaining for a very long time, commodity exposure, commodity exposure, commodity exposure. I don't even know how many. I've put out at least five publications in my free newsletter, link in the description of this video, going over a whole bunch of exchange-traded funds, which would allow you exposure to commodities here. A broad base. When I'm talking about commodities here, people, yes, you could, of course, and my favorite way to invest in commodities is holding physical gold, silver more specifically. But in this kind of an environment, understanding, again, and we covered this yesterday all the time about this hyper bubble in debt. It's not going to stop. It's the nature of the beast here. Eventually, this is going to turn around. Cash is going to bleed out of the debt market, bleed out of the stock market, and move into commodities and cryptocurrencies, in my view. You need exposure to these things. You need to understand that this environment we are in is so twisted. And a lot of this is also this hype on AI, the AI economy. You can't make this stuff up. This is what they're talking about now. Now, this is clearly a way to get people all hyped up, kind of like the dot-com bubble. Okay, we're in a super bubble across the board with regard to equity markets around the world, stock markets around the world. But this AI thing is creating a FOMO, fear of missing out. And people are blindly throwing cash into companies that they think are going to excel moving forward with regard to AI. And more than likely, 90% of these people are going to get burned. I hope that's not you. So with regard to electric vehicles and AI, okay, these are all well and good and fun and lovely, but I wouldn't bet the farm on this stuff here, at least right now. Again, with regard to energy, we're seeing exactly what we would expect to see from a while back. You and I predicted this. We said it would happen. And here it is right in our freaking face. And what does this mean? Higher prices across the board. If any of you out here are looking for some kind of relief with regard to inflation and higher prices, you you got a long wait. In fact, probably a very, very long wait. It's just not going to happen. Central banks are going to continue to inflate. That's what they do. They must do this. The global debt issue, we haven't even scratched the surface here. Think about this. Every developed nation on this earth, under the rule and guide of a central bank, is running multi-trillion-dollar debts and deficits. Okay, this is not going to stop. And we also understand that every developed nation on earth is going to be spending more. Spending more. There is not going to be any real spending cuts. So what you can count on 100% is global debt to continue to inflate, central banks continuing to inflate because that's their only power. You all know that. A central bank's power resides in one thing and one thing only, its ability to inflate. The more they inflate, the more powerful they become. And you're going to find that you're going to hear more reasons to pull cash into the now, expanding wars, expanding programs, whatever it might be, to make sure that the debt continues to inflate. You have politicians, world leaders working in tandem with their respective central bank, who is the real government, to continue to inflate. Now, you need to be on the opposite side of this. This is why you need exposure to commodities. Commodities are real things. And, I've covered this a million freaking times here. Now, another thing that's kind of interesting, and it's starting to get some coverage here on the mainstream, and you should be paying attention to this, is the consumer is maxed out, just as you and I have, again, predicted would happen and is happening. But see, it's not going to stop. Consumers, even though they are maxed out, you have a certain class of people, the middle class, which you and I, again, have covered from years ago, are going to try to claw themselves up, try to keep themselves living in the illusion of a middle class existence. So what they're doing is borrowing and borrowing and borrowing and borrowing and borrowing more. And all this is assuring is a front seat on the train to financial obscurity, and a seat in the train of the lower rung of society as well. You know what's going on here. We've never ever seen anything like this before. This neo-feudal system, you understand? And people are being pushed down to the lower rung of society faster than we've ever seen. Loan defaults higher than even during the Great Recession. But we're not in a recession because they're telling us we're not, and everything is fantastic. And inflation is going to get better. But you know why? Because again, when you listen to the propaganda from the programs, they're trying to program your brain. I'm talking about CNBC, Bloomberg. It's all deception. Look here, don't look here. Everything is fantastic. We couldn't possibly be doing better. But I can promise you that you're going to see expanding wars, more reasons to pull cash into the now, much higher inflation moving forward, although they're going to try to convince you that it's not. Again, forget your lying eyes. Forget how deep you have to reach into your pockets to make ends meet. Everything is perfect, and you know that because you're hearing it right straight out of the mouth of the propaganda ministry. All right. Anyway, with that said, we got a market this morning. Right now, it's 8:26 a.m. Eastern time. Okay. Market doesn't start trading for about an hour. You got stock futures relatively flat. As I said already, you got crude oil over $81 a barrel. Oh no, who would have figured that one out? How about you and I? You got a dollar on a relative strength basis, relatively flat. 10-year yield, also relatively flat. Gold and silver, relatively flat. Cryptocurrencies, relatively flat. The MMRI is at 250. Let's see what they're going to do here. Remember, they have three options. I'm talking about the Federal Reserve. They have to do something. Either they're going to buy more debt. That would lower the 10-year yield. They're going to weaken the dollar one way or the other. Or they're going to buy large cap stocks, via their trading desk. This is what they do to keep this risk on environment going. Just consider the fact that we do not get a pullback anymore. We don't get market pullbacks. We don't get market corrections. It's just up, 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 up. Does that sound normal to you? No, it's not. It's not normal for a market to function like this. And this is, again, an election cycle. It's an all-out effort by the Fed to keep the market propped up, to convince people that the economy is strong and we're doing well. And you're hearing the same exact agenda out of the mouth of the mainstream propaganda ministry. Imagine my shock. All right, people. So look, you know what to keep your eyes on and you know what to do. Okay. Again, this is a channel of action. This is for people that are taking action, doing things to put themselves in the right spot, paying against the debt, becoming your own central bank, exposure to commodities, and exposure to the long end of this market. I've been telling you this for the longest time. I don't think they're done. I don't think they're done. I know the MMRI is sitting at 250, which has proven to be over and over and over again the first red line in the sand. I think they're going to find a way to push it down. I really do. And at least through the election. Let's see if I'm correct on that. Keep your eyes on the MMRI. Keep your eyes on crude oil prices, energy prices. Gain exposure to these things, as I've been telling you. All right? We got this. In my opinion, and I think most of you would agree, we cannot be beaten. We know what they're going to do, and we know why they're doing it. All right, so that gives us an insurmountable edge, at least in my view. All right, this guy here loves you a lot. Please get this video out, share it. Those thumbs up are extremely valuable. Gets the videos seen, so I'm counting on you for those thumbs up as well. I will read the comments, and I will see you later for my live stream, 4:05 p.m. Eastern Time. All right, I'll see you then, everybody.